Want to get paid just for owning a piece of a company? It sounds almost too good to be true, right? Well, that's exactly what dividend stocks are all about. And no, you don't need to be a Wall Street genius to get started. So what's the big secret? Imagine you buy a share of a big, successful company. Let's say a company that makes your favorite soda or smartphone. Because you're a part owner, the company shares its profits with you. These payments are called dividends. It's like your money is working for you, earning you a little extra cash on the side, even while you sleep. Think of it this way. You buy an apple tree. Every year, that tree grows apples. You can either sell the apples for cash or use the seeds to plant more trees. Dividends are like those apples. They're a real, tangible return on your investment. Some people use that dividend cash for their daily expenses, like a little income boost. Others reinvest it to buy more shares, which is like planting more apple trees. This is a powerful concept called compounding, and it's how a small investment can grow into a significant amount over time. Your dividends buy more shares. Those new shares earn more dividends, and the cycle continues, creating a snowball effect. Now let's get real. Not every company pays dividends. Usually, it's the more established, stable companies that have been around for a while. Think of giants in sectors like utilities, consumer goods, or healthcare. These companies have consistent cash flow and a history of profitability. On the other hand, a hot new tech startup is probably reinvesting every penny it makes back into growing the business, so it's less likely to pay dividends. They're focused on growth, not on sharing profits with shareholders just yet. So, how do you find these magical dividend-paying stocks? First, you need a brokerage account. Think of it as your wallet for stocks. There are tons of user-friendly apps and websites out there that make it super easy to open an account, often with no minimum deposit. Once you're set up, you can start searching for companies. When you're looking at a stock, you'll see a few key terms. One is the dividend yield. This is shown as a percentage, and it tells you how much a company pays in dividends each year relative to its stock price. For example, if a stock is trading at $100 and pays $3 in dividends per year, its dividend yield is 3%. This is a handy way to compare the dividend payouts of different companies. A higher yield might look tempting, but it's not the whole story. Another important thing to look for is the company's dividend history. Has it been paying dividends consistently for years? Even better, has it been increasing its dividend payments over time? Companies that have a long track record of raising their dividends every single year are often called dividend aristocrats or dividend kings. These are often some of the most reliable and shareholder-friendly companies out there. A company that consistently raises its dividend is sending a strong signal that it's financially healthy and confident about its future. Let's be clear though, investing in dividend stocks is not a get-rich-quick scheme. It's a strategy for building wealth steadily and patiently over the long term. The market will go up and down. That's a fact. There will be good days and bad days. The price of your stocks can fluctuate. But with dividend stocks, even if the stock price is down for a bit, you can still be collecting those regular dividend payments. This can provide a nice cushion and a sense of stability, especially during turbulent times in the market. It's a psychological boost to see cash coming into your account, regardless of the market's mood swings. For a new investor, my best tip is to start small and stay consistent. And you don't need a fortune to begin. You can even buy fractional shares, which means you can own a piece of a company for just a few dollars. The key is to get started and make investing a habit. Maybe you set aside a small amount from each paycheck to invest. Over time, those small regular investments can add up to something substantial, especially when you're reinvesting your dividends. Another tip is diversification. Don't put all your eggs in one basket. Instead of betting everything on one company, spread your investment across different companies in various industries. If one sector is having a tough time, another might be doing great, which helps to balance out your overall portfolio and reduce your risk. Think about owning a mix of companies. Maybe a tech company, a healthcare company, a consumer goods company, and a utility company. This creates a more resilient portfolio. Let's walk through a simple, hypothetical example. Let's say you invest $1,000 into a stock with a 4% dividend yield. That's $40 in dividends in the first year. It might not sound like a lot, but here's where the magic happens. You reinvest that $40. Now you have $1,040 invested. The next year, you earn 4% on that larger amount. And let's say the company also increases its dividend payment. This cycle of earning and reinvesting is what builds serious wealth over decades. It's a marathon, not a sprint. It's crucial to do your own research. Don't just buy a stock because someone on the internet told you to. Look at the company's financial health. Is it profitable? Does it have a lot of debt? What are its future growth prospects? Understanding the business you're investing in will give you the confidence to hold on through market ups and downs. Remember, you're not just buying a ticker symbol, you're buying a piece of a real business. So, to recap, dividend stocks are a fantastic way to generate a passive income stream and build long-term wealth. They pay you just for being a shareholder. You can use that cash or reinvest it to supercharge your growth through compounding. Look for stable companies with a history of paying and increasing their dividends. Start small, be consistent, and diversify your investments. This journey won't make you rich overnight, but it's a proven path toward financial independence. It's about letting your money do the heavy lifting for you. So, are you ready to start earning money while you sleep? The world of dividend investing is waiting. Thanks for watching. If you found this helpful and want more tips on how to build your wealth, make sure to follow for more.